Okay, I am only going to analyze two of the ratios that I want you to do. You should have the complete list of what I want you to do. And the first one I want to do is current ratio. But now, using all this data above me, I'm going to calculate the current ratio for that year, and then this year, and then this year, okay? Well, the current ratio is, these formulas are already done. I'm going to just show those to you. I like to take these to 2 decimal places, but let's take a look. As always, when you put your cursor in the cell, it will show you the formula up here. And if I want to see in a different graphical way what this is doing, push F2, and it's all nice and pretty. See how it does that? That means it's taking B17 plus B18 plus B19 divided by B26. Okay? Now, these are the only, we know that the current ratio is your current assets divided by your current liabilities. So that is doing what we want it to do, because our 3 current assets in this example are cash, accounts receivable, and merchandise inventory. Now, some other company might have 5 or 6 current assets. You have to make your formula accordingly. Your current we only have 1 current liability, but if there were more than 1 current liability, you would have to add these as well. Now, this is important. You need to understand how parentheses work. What this is saying, these parentheses, this should be basic math, is we want you to add those 3 things in the parentheses and then take that answer divided by B26. Okay? If you did not have those parentheses and you put it in your formula like that, it would give you a wackadoodle number. Our current ratio is not 6,000. But see, what it's doing, it's taking B17 plus B18 plus B19 divided by B26. No, we don't want just the B19 divided by B26. We want to enter our parentheses back in there. And we want all 3 of those numbers added before we divide it by B26. Now we're back to a good old number. Are you with me? These, I don't think you have to do any absolute values on. You can just pull them over. Okay, so once we have that, we can pull it over. Are you with me? We're going to do one more ratio. We're going to do the, let me think. We're going to do the accounts receivable turnover ratio. Now, if you look in your book at your PowerPoints, the way you compute AR turnover, or accounts receivable turnover, is you take sales or net sales. I mean, you take net sales if you have it, but we just have sales here, so that's what we'll use, divided by average accounts receivable. Okay, now you need to pay attention here. This is the last thing we're going to do. Let's take a look at this formula. Okay, I'm going to go to that cell. Well, let me show you what these numbers are first. Okay, I'm going to go to that cell. That is taking, and what I did, let me show you one more time. I put my cursor there and pushed F2. That is taking B5 sales divided by the average accounts receivable. Well, average accounts receivable would be these 2 numbers added together, then divided by 2. Now look at your parentheses here. I'll read this to you. Equals B5 divided by parentheses, parentheses, B18 plus C18, close parentheses, divided by 2, closed parentheses. So what we have to do is the things in the parentheses first. The first thing that we want to do is add those 2 numbers. Then we want to divide those 2 numbers by 2. Then we want to take B5 divided by that number. Are you with me? It's this number divided by the average accounts receivable, which are these 2 numbers. Are you with me? Now, and that equals 0.36. If I pull that over to here, let's push F2 here. That is sales for 2019 divided by average accounts receivable. Now that means that the ending balance of 2019 and the ending balance of 2018 is what you're going to use to compute accounts receivable. Or you can think of it this way. 2018 ending balance of accounts receivable is the same thing as the beginning balance of 2019. So this sales is divided by these two accounts receivables averaged out. Okay. Now, if I pull this over, it's going to give me an answer that I can tell is wrong, because look what it's trying to do. I don't have 2017 accounts receivable. So I would have to do one of two things. I would have to go get those 2017 numbers and put them in there if I wanted an AR turnover for 2018, or I could just say, no, I can't do that. Okay, can't do that because I don't have this year's data. I cannot figure out 2018 accounts receivable turnover because it requires the 2017 accounts receivable ending balance, and I can't do that. Okay, I'll go ahead and put this, right align this. Okay, so this is your ratio analysis down here, and you can add whatever other ratios I want you to compute. And again, you probably have more than 3 years to do. Now, all of this is stuff that we have done before, but I went through it all again, and I know it took a while to watch, but to kind of give you an idea of how to work on this project. Take a look at what I've given you as far as your specific project, how I want you to work it, but this should be a good example of how I want it laid out. Thanks.